What is up, traders? Jim here with your weekly market breakdown for October 25th, Sunday through Friday, October 30th. So getting straight into it, the first pair, and as always, those of you who watch the weekly market breakdowns when I was doing them a lot more actively in the spring and summer, they are coming back. So be prepared for these again on a weekly basis. So you guys and girls already know that I like to start out with the DXY. So here on the DXY, we can see that we have been losing a lot of our strength that we had gained sort of, after March into the coronavirus. We began to lose a lot of that momentum, and ever since, really haven't been able to pick it back up. Went all the way down to 91,746, right? We did have a nice pullback. Okay, we came back, retested our institutional level of the $95 region, and we are shorting it, right? And we expect it to come back down into that 91.46, if not move further. So we expect that to continue for now. So basically, US dollar pairs most likely going to short. And then the other major pairs opposite US dollar, so GBP USD, Euro USD, out, NZD, all of those, we most likely will expect them to go long. Now, again, please do not take these as signals. This is a pre-week analysis. This can change the market as it gives us more candles and sort of speaks to us in its language a little bit more. Okay, these biases can change. Okay, but this is going into the week before the market open here. So that's what we would expect, and I would like to see continue here on the DXY. And again, we've already sort of had this little bit of pullback here. So what I would like to see happen, okay, market come back down here, right, break, maybe hit another retest here, and then take those levels out, right? Now, what can happen, right? So it's always this and then that, but it's always good to know both scenarios. We could have the market come down, hit these levels, right? Bounce. And if that were to happen upon the retest, right, we would then look to take the market long again. Okay, so but until these highs here would be taken out, I would not be looking to long. I'd only be looking to short in this specific market condition. Okay, so moving on, and we're going to look at a few pairs today. So gold is the next one that we have. Okay, and first and foremost, this short actually from the 22nd, the 21st, 22nd, you can sort of see here, right? Market has been sort of ranging really ever since September 29th or so. Came back up, retested these daily 4-hour highs here. Okay. Ended up rejecting, nice wick rejection here. And it was also rejecting institutional level, failing to get up into those highs. Right. Market pushes. We have another opportunity over here. Right. Could have fibbed from here to here. Gotten in a nice entry here. Based on that 1-hour time frame on gold. We all know how important that 1-hour time frame on gold is. Could have gotten one of these entries here. If not, when it breaks, right, scale down to a 15 or 5-minute entry time frame. And even if you missed the initial push, there's always going to be some sort of pullback, right? A little bit of pullback here, and you're still able to catch, 110, 120 pips there. Now, where it's at currently, okay, you can see it did go a little bit past those lows and then immediately shot back up, creating this sort of 15-minute double bottom. You did have pullback. This looks to be about a 382. I may be wrong here. Let's double check. Yep, 382, and even sort of pushes down towards that 50% retracement level there. So I would low-key be staying away from gold for now. Here on the hourly is what I would be more focused on. And I would be looking at something like this here. You have to be mindful. You could be getting a double bottom. But I like verifiable things, right? I don't like to react to the market. Or I'm sorry, I like to react to the market. I don't like to predict the market. Okay, so I'm gonna wait and react. I'm not gonna predict and be like, oh yeah, it's gonna double bottom, I'm gonna buy right here. I can do that, sort of counter trend trade, and then hopefully it takes out. I've done that a lot in the past as well, but I find out that can sometimes create added stress that's not really needed. So I don't really counter trend anymore. I follow the specific trends with whatever my higher time frame is, and if I get an entry based on my entry time frame, okay, I'll take it, and if I don't, I'll move on to a different pair. I'll move on to the next setup, right? Look at it this way, okay? Like if you have a job, say you get a brand new job somewhere, okay, you're gonna wait 2 weeks to get your first paycheck, or sometimes even 3 weeks, but you can't wait 3 London sessions or 2 New York sessions to wait for your specific setup to form to get paid. Once I started thinking about it that way, and not really trying to trade, everything, just waiting on my specific setups and then dropping bombs on them. I noticed that, again, it comes back to what I've always preached. Less is more, right? It keeps going as you pierce through these levels and you continue to grow in your trading journey. You'll realize, less is truly more. I've said it a lot, and I always tried to implement it. But now that I really am truly trading a shit ton less, it's 2 or 3 setups a week. Now, but they go for a few hundred pips. I get big lots on them. I make my money and I can be happy and done for the week. So I would be looking for something like this as of right now. Okay. Waiting for it to pull back a little bit further, maybe come up to the 70.5, do a full retest sort of this trend line here. And again, we will wait for something verifiable here on our entry time frame for gold, which would be the 15-minute. Maybe it comes back up to here, to this previous high right here, and then it sort of rejects, right? If we get a break here, I would then wait for a retest, maybe even right here, neckline, top of that institutional level, and then short the market from there. Okay, with stops above these highs here. If not, right, the market could theoretically continue all the way up into here, right? Like I said. And then what I would be doing, I'd be waiting for this 15-minute time frame to show a shift in structure. So if it does something like this, right, I'm not going to sell right here just because it did this, because what could it do? It could do that. So I would wait, see if it comes back up here, or see if it comes here and rejects again. And once I have a break in structure on that smaller time frame, pull back, and then here would be my entry, right? If I don't get that double top, or a double top right here, or a double top up here off of one of these levels, and I get a 1, 2, 3 push, that's a verified entry as well for me. So then I can pull out a fib, right, from that swing high to swing low. And again, a lot of mentors will teach go wick to wick, body to body, body to wick, body wick to body, whatever it is. You can be successful using a Fibonacci with any of those. But whatever you're going to do, all I will say is be consistent with it. Okay, so I am going to be looking for gold shorts, okay, and gold shorts only until these highs here are taken out, right? But waiting for that verifiable entry. Now, if these highs here get taken out 114.29, then I may change my bias, right? So if we do get something like this and it comes all the way up, takes these out, pierces these highs, guess what we now have? An hourly double bottom, right? If that happens, I would then wait for pullback again, fibbing from these lows to whatever the high is here, and then doing the same thing, waiting for that verifiable entry. Okay. So that is gold USD. Here we have GBP USD. Okay. And here on a 4-hour time frame, you can see that market structure is still pushing up right over here. You take these lows out, you pull back, you take those lows out again, pull back, fail, break the high here, come back down, 1, 2, triple bottom, break these highs, pull back, here's an entry, you continue higher, right? You pull back again, here's another entry, you continue higher, pull back again, here's another entry, continue higher, pull back again, here's another entry, continue higher, pull back again, here's another entry, right? Shoots up, comes back down, retest, double bottom, shoots higher. So 4-hour low, high. Okay. I did take a very, very precise entry here on this candle. Actually, it was this candle here on Friday. Okay, I did catch a 3-to-1, so I managed trades very, very aggressively. After 1-to-1, stops go break even. After 3-to-1, depending on how I'm doing it, I'll either take 80% profit or all my profit. I did take 80%, and the remaining runner was stopped in profit at 1-to-1. On this specific trade, you can see it pushed down again. But overall, yes, I caught a buy here, and I will show you that entry and how I caught it. But overall, my bias is still going to be a buy on this. Okay, so this coming into this week on GBP USD, I'm only going to be looking for buys. Okay, the only way that will change is if this market comes down, continues down here, takes this low out. Okay, then on a pullback retest, I would then look to short the market. Okay. But until that were to happen, or this were to happen, say the market does buy up here, pushes back up, fails to break that high, comes, pushes down, and then were to like take this low out, then I would look for pullback, maybe even retest the bottom of this level here. Okay. And then come all the way down into here. Okay. But first this, then that, right? Again, first this, then that. So until that happens, I'm only going to be bullish. Okay. And again, however you trade, don't, again, I'm gonna say this every few pairs. Do not take these as signals. This is pre-market analysis. And make sure these line up with your own trading plans. I may trade different than you, right? I use a higher time frame structure to create my bias, and I will use a smaller time frame, waiting for a structure to break on those time frames, and then I'll go ahead and get my entry. So this specific trade here, this was actually, this was around 6 o'clock. Actually, I want to say I entered in at like 5:45 on GU and GJ on Friday. It was like right around here is where I entered. But what I'm looking for, okay, is a break-in structure on a smaller, like 15 or maybe even 1-hour time frame. So we have a high, a new low created, a new high, right? A new high. So here's the high. The low is taken out, doesn't create a new high here. So here's the high. Guess what happened here? It got taken out. And I'm getting a reaction off of my 4-hour. I'm looking for reaction off of a 4-hour fib level, which I'm getting here. Yes, it's the 38. That's minimum measurable retracement. So I saw the market. It took this level out here. Okay. And we will put this ray here. Okay. I saw the market, it took that out. So guess what? I can pop a fib here. I got my entry in down here. And guess what? The market gave me a good risk to reward ratio, right? My entries were here. My stops were here. And you can see that I was able to catch that 3-to-1 ratio. Okay, so a little bit over 3-to-1. Okay, you can see it piercing out. But that's pretty much it, right? So caught it, was able to close 80% at that 3-to-1, and then a runner was left running at 1-to-1, which got the remaining portion would have got stopped on the close, the pierce of this candle here, right? Would have got taken out on that candle. So regardless, quality trade there for me. Good 3-to-1 ratio. The market did continue to push down, right? And sometimes that will occur, but that's fine. Here on the 4-hour, right, it retested this institutional level and then continued down to this next lowest one. Now, again, I am only going to be looking for buys on this. As you can see right now, we had this push down. We did pull back, try to retest that neckline, didn't come all the way into it, right? Push back down, failed to go lower, pull back a little bit, boom. Okay, and now you're doing one of these. So I would be waiting here, and maybe even since the 15-minute didn't work out as well as we would have liked, maybe go on ahead and then where I might wait for an hour break of structure here, and then look to enter in on that market. But I'm only looking for buys until the market breaks that structure. Okay, USD CAD here. We can see that we are pushing down. Got a lot of fibs here. I'm going to delete some of this old stuff. This guy's closed already. This guy has a runner running actually. All right, we'll leave that guy on there. So again, right, we have this market structure that is pushing down here. Okay, boom, pull back, boom, lows taken out here. If you consider those 4-hour lows, right, they're pierced here. You did have a market come back. You had some pullback here, double top, right, pull back, boom. So regardless, you're looking for shorts up in here. The previous push, which you got, market does continue lower on the 4-hour time frame. So now we have a high, a low, and then we are looking for that retracement here, right? Came off of the 50, entry in 131.55, currently 30 pips in profit. This is a 9-to-1 ratio, targeting these 4-hour lows here. Currently past a 3-to-1 already. Okay, so my normally my risk appetite is 5% risk per trade. And again, how I manage, I'll close 80%. So 4 out of that 5% risk will be closed at 3-to-1, which usually nets me 12% profit, a 12% gain, and then a 1% runner will be left running. So 12%, and then if it goes this full 9, that 1% runner will give me 9.33% to add to that 12, and this full trade here would have netted me 21%. Okay, 21.33%. So same thing here. We do expect this market to continue to short until it does not anymore. And by that, I would have to wait and see it come up here. Well, I would be stopped in profit, of course, first on this move. But for me to switch my bias and long it, really we would have to break through this institutional level of 132.5. So we would either have to go ahead and come up here like this to start the week, or come break this level. And if it comes back, and does one of these, and I get an engulfing candle or something, it's most likely going to do this. If not, maybe come up here and then reject. But if I get stopped out here, again, I would be waiting for a verifiable entry based on my trading plan anyway. But if it came out, took these highs out, 132.595, then I would look to possibly go long on UCAD. Or if and when we do come down to this 130.80 level, and if we get like a nice engulfing or like a morning star up, right? Because then we could possibly be looking at a double bottom here. And if that were to happen, right, we might get in on that bottom or on the leg of that W, take it up, right? As soon as these highs get taken out, we'd close that position, and then we would fib looking for the pullback, right? Lambo lot, this bigger verifiable entry here, and have something like that, right? So if and whens, right? If and whens, but that is the UCAD analysis. GBP JPY, very, very similar to that of GU, right? Here's the 4-hour low high. Again, on Friday, I was able to catch a 3-to-1 on this, sort of off of this 70.5 level, 62 level over here. Okay, and again, this is shown here. We had it push into these levels on the fib. We did have divergence here as well, a divergent push up. And you can see by this impulse here, right? Upon that pullback here, again, 5:30-ish is when I said. And you can see you fib. Here's your entry. And if you're not setting limits here, entry would be, you see this rejection candle here on the close of this candle. And then you would put stops 3 to 5 pips below that wick. And we'll just do 5. And then you can see it did come to that first extension target as well, which hit 3.5 to 1 risk, right? So not too shabby. Again, it did end up continuing down. It retested this institutional level after coming through it, retested, and continued lower. So again, waiting for a more verifiable entry here. Maybe even waiting for that 1-hour structure to possibly break. If not, I will wait for this low here to be taken out. And for my bias to truly change on GBP JPY, it'll have to come close through this institutional level. And then on that retest, I would look to then short. If it comes down, and comes down even to like here, yes, it's taking out the fibs. I'm most likely not in a position anyway because I wasn't given an entry. But because it could come down here and then immediately shoot up off this institutional level. Okay, those of you in the academy, you know how well and how price reacts in and out of these levels, how important these levels are with interacting with price as well. So, yeah, we could see something like that as well. If you're not in the academy, you want to learn about the levels, everything is in the description, links to the academy, links to the Signals chat, the Discord chat, as well as the free resources. So again, USD pair here. We already said DXY going down. We've had this sort of this 4-hour head and shoulders pattern that's playing out in the market. Okay. Right. Lows are being taken out, all of these sorts of things here. So again, 4-hour head and shoulders pattern playing out nicely, rejected off of this 38 again, right? Minimal measurable retracement, verifiable entry waiting for that 1-hour low to be taken out. Pullback, entry off the 70.5 Fibonacci, right? Stops back here. Again, 3 to 5 pips above those highs, right? And this was close of the hourly candle was how I got this entry. These will be our first stop, which will be 6 to 1, which will be off of the head and shoulders target. And then our next target will be these 4-hour lows over here. Okay, so that would be something I'd be looking for. If we come down here, bounce up, okay, it could happen. Or if we get stopped out in profit, right, whatever, stops already at break even on this, very, very aggressive management after 1-to-1, stops go break even, right, 7 pips stop loss, we're 10 pips in profit. Currently, I risk 7, so 1-to-1, 7 pips profit, right, so I'm already at break even. So it doesn't really matter regardless. But the only other real way my bias would change and I would look to go long is when these highs up here get taken out. Okay, these highs up here get taken out, or we do push down here and then we double bottom, right? When those highs here would be taken out, then we would look for a retest and then that continuation. Okay, so that is Euro USD JPY. We're going to look at Euro USD and then Euro AUD, and then we will go ahead and call it a day. So again, here we have this sort of this market, right? Double bottom here. There's your pullback. Break higher. There's your pullback. Break higher. There's your pullback. Break higher. These lows here were taken out. So you do have a shift in the market here. There's your pullback. There is your continuation to that downside. Okay. Now, here's a first indication. You do pull back again. You would expect it to go short, right? You'd be looking at the market this way. It does pull back. It does go short for a bit, but it fails to go all the way down and break those lows. Okay, fails to do so. So you're waiting for these highs to be pierced, taken out. That happens, right? That happens right here. Now we're waiting for the market to give us an opportunity. Is this measurable pullback? All right, let's go ahead and delete this guy for now. Is that a measurable pullback? Minimum 382 retracement? No. So you've got to keep dragging your fib up until you get measurable retracement. Okay. Breaks at 382. So is it past that measurable retracement level? Yes. C it is, senor. Okay. So now that you have measurable retracement, right, you can go to your entry time frame, whether that be 15-minute, hourly, whatever. And again, you're waiting for a break. So here on the hour, head and shoulders pattern, pull back, continuation down, sort of a double bottom here. Highs, important, right? Previous highs or lows being taken out for these reversals. So previous high is taken out, fib from the low to the high, find your pullback, right? Find your retracement. Again, entry here was on the close of the hourly candle, saw it coming to the 50. Thought about entering in down here, did not. Saw price reject off the 50 with this hourly candle close, as well as these 5 and 15-minute charts. Right? So utilizing those put together, that hourly chart, right, came and closed up here, right, 905. Okay, you're able to get in over here. You're able to get in possibly on this pullback here, right, on a smaller fib, 5-minute fib here. Right, you could have used that to get the exact same entry that I got getting in on the close of that hourly candle. Okay, so be smart, be mindful. Again, the first target is that previous 4-hour high. right? Risk to reward for that, 3.27 to 1. Okay, I always like my first 4-hour target, which is usually the 0 on my fib, to be at least a minimum of 3 to 1 risk to reward, right? So this is, again, what we could see. We will anticipate a break of that high until the market breaks structure to the downside. But our scenarios here, we either want the market to come up here, right, break high, come back, pull back. Here will be our low. Wherever the market ends will be our high. We'll look for retracement, continuation to the upside. Or we could see something like that, see the market come back up here, right? And then we would look to short from here. After that 4-hour structure would be taken out. We could also see that happen right over here. We could see the market come up here, reject, right? Come down, take that low out. If that were to happen, pull back, I'm going to look to short it again. Okay, but we need to see the market sort of reverse off of that. And again, we also have this trend line here. So double top, maybe a break of the trend line and structure, retest, right? Added confirmations. But right now, right, we are in buys on Euro USD, and that should not be changing anytime soon. So here we have probably a very, very good opportunity. Okay, again here, from back over in here, and let's scroll back a little bit. Beautiful 4-hour double bottom here, push up, right? Retracement, another beautiful 4-hour double bottom. Price pushes, right? Breaks those highs over here. Technically breaks from here, not minimum measurable retracement though. Push. Okay. We are at the 50% retracement level, right? Verifiable entries, maybe use the 1 hour, maybe use the 15-minute chart. For me, this could be a very good possible setup for me here. Okay. We did have a 15-minute chart entry here on Friday. Okay, we had a market push, pull back here on a 15-minute, failed to break low, 15-minute double bottom. So we did have a very good 15-minute entry in Friday, right, which netted about 75 pips or so. Okay, it does look like we are going to get that hourly as well, right? We have this hourly double bottom here, broke the neckline, and is now pulling back. So we could theoretically be getting this very, very nice move here. So what I would do, either, waiting for a strong, 15-minute rejection candle or something. If not, I would set a limit, maybe a buy limit. Y'all could put it on like the 17.5. That's my money for my buy limits. It gives me enough room to breathe, while still allowing me to get a pretty good entry, and have, a very, very small stop loss. So, and how I would go about this specific trade. Again, the first target, you're going to target those 4-hour highs here. Okay. Again, the market could continue to push down here, right? It could. Again, this could be, right, 1-hour counter trend here, boom, and it could continue down and then buy off of here. So that's why I'm saying wait for a verifiable rejection candle, off of this double bottom here on like our 15-minute basis. But could be a nice buy setup. And until these lows down here at 163.563, 163.563 are taken out, we're going to go ahead and we're going to stay in this, right? 163. Until 163.078 is taken out. I apologize. until that level right here is pierced to the downside, we would not be looking for shorts, right? So only going to be looking for buys unless this happens. Then I would look for shorts on a pullback, right? Or if our buys do play out and we push back up to this 4-hour high, reject, take out those lows, then on pullback, I would look to short the market. Okay, so that was today's weekly market breakdown. I hope you all enjoyed it. Again, please like the video, subscribe, comment. Okay, it hacks the YouTube algorithm and allows YouTube to put this weekly market breakdown in front of more like-minded traders. Okay, a lot more like-minded individuals, and it will allow us to grow and help many others. So be sure to like, subscribe if you found this video useful. Comment down below which pairs, if any, that you would like to see added to next week's weekly market breakdown. Let me know your thoughts on the analysis as well in the comments. Peace, love, and I'll see you traders on the other side.